Hey guys, today I want to do a video on things I've learned after I talked to a financial advisor for my own retirement portfolio. So I want to share that with you guys on some really quick things I learned from her and just tips for you to thrive in your retirement account. So first of all, before I go further, during this turbulent times when the market is uncertain and of course you see a very not great bull market, potentially a bear market, right? Like recessions or heading towards recessions. One thing, as Warren Buffett, one of my role models, says is you want to not buy or you want to buy low and sell high, right? So in times like this where everything is at a quote going down or discounted price, if you have money reserves in terms of cash flow, you have money, then yes, you want to buy at this time. Of course, if you're already currently invested in the markets, you want to just ride it out. So, and it also depends on your age when you want to retire. So the rule of thumb is 100 minus your age equal the percent of investment that you want to invest in stocks. So 100 minus 30, if you're 30, you're 70%. It's supposedly, you could go higher or lower depending on your risk tolerance, but that's kind of the rule of thumb. So if you're already invested in the stock market right now, you do not want to sell because basically you're selling low, and that's not what to do. You want to sell at a high price, like in a very nice peak market. But right now the market is not high, so you want to just ride it out and coast. However, in terms of rebalancing your investment portfolio, so let's say your risk tolerance, you want to do 70-30 and or 80-20, whatever the case. I'm going to pick 70-30 for the sake of discussion. So let's say 70-30, however, right now your retirement account, because all the shift in the market recently, you see that you're actually 50-50 stocks and 50 bonds. So this is a great time to actually rebalance your investment from your bonds to buy stocks to get to that 70-30 portfolio. And this is a great time to move your bond to if it's 50-50, you actually get 20% of your bond to buy more of your stocks. And that's because you want to rebalance it to 70-30. And it's a great time to buy because you want to buy at a low price. And because right now with everything's going on, that decreases the market, and everyone's stock price has, not everybody, but most of the stock prices are lower than what they were a few months ago. So that's one thing I would definitely recommend, and is rebalancing. In general, she was also telling me that is at minimum, I am one of those that I invest and I close the door and don't even think about it, right? I don't look at my retirement day to day. So at minimum, she said try to rebalance twice a year. And the two times that she recommend is before tax season, because before tax seasons, and then also towards the end of the year, like near the end of September. And the reason she said that because before tax season, the market, quote, supposedly tends to go higher. Hence, you want to rebalance it so you can actually kind of maximize and take advantage of the market when it hits up. So you will actually be able to take that advantage of that before tax season. So she was telling me around March, because April 15th is kind of like the tax deadline. So say around March, or just in general before tax season would be great, or tax deadline, because it tends to peak up a little bit higher. The other season that she was saying is also around September, because nearly end of the quarter, that's when all the companies disclosing their their income statements and their earnings and whatnot. So around September, October is also a good time to rebalancing your portfolio, because potentially with their earnings, depending high or low, it might dip or increase. So that's also a good time to take a look at for you to rebalancing your portfolio. So that I didn't know that before. So that March and September, so every twice a year, 6 months apart. So that's something I learned from her, and I was like, oh, wow, that's pretty cool, and I want to share that with you guys. And the last thing I want to really share with you guys is that if your employer has a financial advisor that offers free service, aka it could be in person or it could be over the phone, I would really recommend you to make an appointment with them and talk with them about your portfolio. Some of us are not financial savvy in terms of like from investing, and some of these services can be asked. Like they have financial planner, and if your company's already paying for them, why not take advantage of it, right? And with my own personal story, I moved from one facility to the next facility that are separate entity, but they use the same financial company. So even though at my current facilities I don't have like one-on-one in-person consult, I still keep in touch with this individual that I have created a relationship, that I've been doing it for like the past 4 years. So even though she's not technically within my account, but she's still within the company that carries the financial, that does a lot of financial services for our employer. Hence, I just keep in contact with her, and she knows me and I know her. And it's just a good relationship to have. So I would highly encourage you to start forming a relationship with a financial advisor at your current employer that they have with, so you can ask questions. And I really reach out to her. Like one thing I also do, a tip that has become very effective for me, is that I actually block out calendar reminder to do my rebalancing every 6 months, and setting up an appointment with her to talk to her every 6 months. So I do a repeated calendar. So I block the time out to remind myself, oh, I need to first meet with her, and then second, rebalancing my portfolio. And sometimes you may not need to do anything, and then sometimes you do. So those are some really quick tips I want to share with you regarding stocks and retirement account. Also, a friendly reminder, make sure you guys set out time to look into your Roth IRA. For those that don't know what Roth IRA is, it's essentially another account that you can do for retirement, and it is tax-free at the end of your retirement account. I would highly recommend you guys to take a look into that. Another thing that I've learned is that our employer offers a kind of like a 401k Roth. So if it's a 401k Roth, or we call it 403b. So a traditional 403b, where you can have up to $19,500 of like as of 2019, right? And they offer a 403b Roth. So I didn't realize that it combines the $19,500. So regardless of putting traditional or this 403 employer Roth program, it's limited to $19,500. So that's one thing I learned again this year as well. So what I've learned is to, with the Roth IRA, it does have an income limit, which I talk about in my previous video. So you really take a look. If you're not able to contribute, you are qualified to do a backdoor Roth conversion. Excuse me. And what that means is that you are able to, so you cannot contribute, but you can go into a traditional IRA, put the money X amount that it qualified for that year. So for sake of discussion, say $6,000. So you put in a traditional $6,000 IRA, and then wait about 1 or 2 days after, and then you convert it over to your Roth IRA. So you don't necessarily contribute directly, but you can also do a backdoor conversion, right? So for those that have looking into retirement and have those cash, and because the Roth IRA is a post-tax dollar, so if you're able to leverage that, that would be really great. This is something I learned recently, and I want to share that with you guys. And the reason why is it better? Not necessarily it's better, but when at retirement, you're able to take it out tax-free. So you're technically leveraging your money that you can take out at retirement to leverage how much tax would be. Because for right now, for a 1K account, you are able to take money out of it at retirement, but it'll be taxed. So if you have another account where it's tax-free, you could technically do $50,000 here, $50,000 here. So you really only be taxed on $50,000. Versus if you don't have a Roth IRA, you have to take $100,000 out at retirement, then you're going to be taxed fully on the $100,000. So that's where the tax benefits come at this point. I hope you find that helpful, and for those that have other comments, please post those below and just share your experience. And make sure you subscribe to my channel for more videos to come. Thank you.